Hey, deal makers, and welcome to the show where it's all about financial freedom with real estate. Let's do it. Got a great show for you today here. We are here with Brian Wagers today. Young guy, got started in his 20s, and at 29, he's financially free. He's got several hundred units and is really scaling this thing to a higher level. And really the different is he discovered the importance of platform building, of marketing. So we're going to talk about scaling today. Super exciting. This is really kind of what we're going to talk about with Brian Wagers here as well. He figured this out as well. He started investing in real estate in his 20s. Now he's at 29 years old. He's got a portfolio of 361 units, and he did all that stuff, before really thinking about marketing. Actually, it was a couple hundred units. And so he realized it was a problem. You couldn't meet with enough people one-on-one to really raise more and more capital. And so he started paying attention to marketing, joined one of our programs that's for more advanced indicators called Platform Builders, where we really teach people how to market. And that's exactly what he did. And it launched him to a whole new level. And so we're going to get into why that happened, how he was forced to do that. And I think the lesson here is, let's start thinking about here as early syndicators. Let's thinking about scale earlier on, but you can see what difference marketing made to his business. Let's get an interview with Brian Wagers. Brian, welcome to the show today.
Hey, Michael. Hey, Garrett.
So you've done a bunch of stuff. You quit your job recently too, all right?
I am not in my job. So it's a business more than a job, but yeah, I'm separated from that.
Yeah, I love that. We're gonna get into that. And you've raised a bunch of money and done a bunch of deals, and we really want to kind of see what was how did you get started in real estate early on? Like what was going on in your life, and how were you going to solve that? What was going on?
Yeah, so I was in sales right out of college. I jumped into the sales world, which I highly recommend for anyone that is unsure as far as what career path they want to go. But I had been with the company for 3 years, and I was starting to max out my Roth IRA accounts, and I knew I had to do something else outside of just putting money in that 401k and just watching it. So I played my hand at the stock market. I tried to dive into that a little bit. I lost money in a company called GoPro. So I put a bunch of money on GoPro and watched that went from $35 to $5, and I had no control over that. So it led me to real estate. So, when I was doing research, it was either the stock market or real estate as a way to build wealth. And, that the stock market way didn't go particularly how I planned. And it was a lot out of my control. So all roads led me back to real estate. And I had money saved up, and I bought a single family home, managed it myself and everything.
Yeah. So I think that's a very common thing, Brian. You read that purple book and real estate, passive income, and you got to buy a house, right? You got to do it. It's a requirement. Though, of course, the book never actually says it specifically. You're thinking, got to buy a house. Now, so did you buy another house and another house? Did it kind of work out a thing, or how did you end up finally getting into apartments?
Yeah. So I had it rented out pretty quickly. I didn't have any tenant horror stories. There was no busted toilets at 3 a.m. or anything, but I was in there, and, the income was coming in, and just kind of doing the math, it was going to take way too long to get where I wanted to be, so there was no crazy aha moments. It was just the foreshadowing of scale and looking forward on what I wanted to do. And that led me to, particularly your information out there. A lot of people get started on bigger pockets. They get that information. I think that may be like the beginner's course as far as if you want to get into real estate. And, I think I heard one of your podcasts on there, and it drew me to your kind of platform. And that's when I really dove into multifamily. And I had before I sold that single family home, I had a 12 unit under contract.
That's pretty cool. So you decide, so what were some of your earlier steps that you did, right? Because you're reading a book or listening to a podcast like, oh, apartment buildings, that's great, but I only have like 1 or 2 houses. I don't have $1 million in the bank, what was your plan to get into multifamily, and what did you actually do then?
Yeah, so I made a decision to get into multifamily. That was the first thing. I knew that I was just going to go after multifamily, nothing else. So I just started looking for multifamily properties. I set up notifications for anything. You can do it on the Realtor app. Pretty simple. That was what I did back then. I reached out to some commercial brokers. Hey, I'm in real estate and I'm looking to continue to grow. I started talking to friends and family and letting them know what I was doing, and really get educated on the space. So I had your syndicated deal analyzer. That was a huge help as far as underwriting deals. Went to, I'm not sure if it was Dealmaker Live, the name of it, but at one of your events in DC, brought my wife out there with me, to really get hands-on experience and be around other people that were doing the same thing. So those were some of my first steps.
Yeah. So you listened to a bunch of podcasts, and then I think you started using syndicated deal analyzer, and then took one of our online courses, which we now call Dealmaker Training. And then that's right, you did come to one of our live events up in DC. And so, all right, so you got some education through the course. You learned how to underwrite deals, which is critical. Why are these events so important? Why were they so important to you? Because it's not the only one you went to.
Right. Yeah, it's important. I mean, it's one to get around other people that are thinking like you, and to get around people that are actually doing deals, to talk to them. And that event, we actually walked through a deal. So that was huge as far as like, okay, step by step, what happens? What are we saying to the commercial broker? How are we figuring out if this is a good deal or not? So simulating a live deal was huge for me on that actual event. But then talking to other people that were maybe had their first couple apartment complexes, or someone who had hundreds of units, or people who had thousands of units, and people had, so you see all different aspects of the multifamily game. So that was huge as far as eye-opening for me.
Yeah, because you're kind of, doing this on your own. You kind of think you're kind of crazy, right? So you tell your friends, I'm going to buy an apartment building. Like, right, sure you are, right? You're nut, and so you kind of feel like you're kind of crazy until you get one of these other events. You're like, oh my gosh, there's a whole bunch of crazy people here, and it's actually kind of liberating. It's kind of encouraging as well. And what did you do to get into your first, maybe second deal?
Yeah, so that first deal, it was on the MLS, so a lot of the smaller deals, you see get traded by some of the residential brokers, so stuff that's under 50 units, a lot of times residential brokers will get their hands on it. And it fell off the MLS, but I was staying in touch with the commercial broker. By the time that I had convinced my partner to invest with me, it was already under contract. But one thing I did was I stayed in touch with a commercial broker. I went on his website and everything, and I let him know, hey, I missed out on this one, but I'm interested in more deals. And sure enough, the deal came back on. It didn't show up on the MLS, but he posted it up on his website. So right as he posted that up, I called him the same day, and I told him, hey, I'm ready to get this under contract. I'll meet you at the property. Let's get this going. So that was how the first one went. And then after that, I did some seller financing deals. I did, a bunch of joint ventures, and now I'm doing syndication, so I've done multifamily just about every way you can do it. So I knew that I wanted to get into multifamily. It didn't really, for me, it wasn't one way or the other. I just wanted to get deals done.
So Brian, when you're kind of sourcing deals, and that obviously, you first of all, you did something which a really good strategy is to keep with deals and chase them around through the life cycle. I used to actually put on my calendar when they were supposed to go under contract, and then when they were supposed to go hard, so that I knew when those dates were. And if they didn't hit them, I was right there to reach back out to the broker and say, hey, did this go under contract? Okay. Did it go hard? Once it went hard, I was kind of like, all right, I didn't track it as much anymore, but I would say, listen, if this does fall out, reach back out to me. So I like that you were kind of chasing it, even though it came off the MLS. That's a really good strategy. But while you were doing all this, how did you know that you had the money there? Like where did that come from? How did you kind of source that capital? How did you have the confidence to move down the path with that?
Yeah. So it would, and to your point, like that wasn't the first time that a deal I went under contract with someone else, but I followed up with a broker and was able to get it. So, I mean, that's huge follow up on every aspect of the business, not just the commercial broker, but, investor side as well. But for me, it was my girlfriend at the time. Her dad had owned, as I'm talking to people like my friends and family, I'm telling my girlfriend about it too. And, sure enough, her dad owns 10 single family homes free and clear. And what took me so long was to convince him, hey, leverage can be a good thing. They went through the '08 crash and everything, and they were used to owning these real estate deals, free and clear, and they were super conservative. But I was able to show them, worst case scenario, through using that analyzer tool, almost like, hey, here's what we're going to have it under contract for. Here's worst case scenario. Here's worst case scenario. We're breaking even. Here's best case scenario. You're crushing your returns of these single family deals that you're doing, and you're not having to deal with the headaches of it. So finally had convinced him to do it. And once I had that, I knew that I was good to go with it. But, I wasn't sure that I was going to have that money, but I knew if I got this deal under contract for what I wanted to do, it's going to be a good deal. And I was just going to go through my phone book and just call everyone I knew and just try to put it together. But I had that conversation with him as well. So there was a couple of different sources, but I had been talking about it a little bit as I was going to these events and, getting my education on it.
So you were talking about other people about real estate. It wasn't the first time you heard, but when you had a live deal, was that like literally the first time you asked someone to invest?
Yeah, that was the first time, so the single family was my life savings of the time, was for that. And for that was my first time asking.
You were kind of warming it up. It wasn't just a cold deal. Here you go. I got one. Who wants to get in? You had a few conversations prior, and if you guys want to take it a step further out there, you make like a fake package of a deal that might look like that, the deal that you're going to buy. And you take that and shop it around to get people interested. But to just go cold out there, like some people think, oh, I just find the deal and the money comes. It's not true. You got to have some relationships out there.
That's right.
You still had relationships in your phone book to call.
That's right. That's right. It's like Jordan Harbinger. You got to dig the well before you're thirsty. I'm curious, Brian, how many people did you call? Like a handful?
I was ready. So I hadn't actually called anyone before that. I had people ready to call. I knew I was going to have to call on that first deal. I was going to go through the list of people that I had. I had about 20 people that I knew were, higher income earners and people that I had conversations with before. But luckily, after a lot of conversation, it wasn't cold. So it wasn't like, hey, I'm buying multifamily real estate now. So it was, hey, this is what I'm looking at. I'm going to these seminars. I'm doing these courses. I'm talking to these other people. I have, I considered you a mentor, even though we weren't mentoring directly yet. So I considered you and spoke of you as a mentor. And hey, this guy has thousands of units under his portfolio. So I'm able to leverage that track record. And that's where I'm getting my education from.
To Garrett's point, though, I mean, it was conversations you've had weeks, possibly months before. So when you made that call, they're like, oh, yeah, I've been finally. It doesn't take long to do a first deal. So that's pretty cool. So on that first deal, how much money did you raise for that first one?
$125,000.
All right, that's awesome. And how much was the actual property?
It was $500,000.
All right, so $500,000. That's pretty cool. Now your second one, how big was that one? How'd you raise you for your second one?
Yeah, so my second one was a 20 unit deal, and that was about $1 million, just over $1 million purchase price. Mm-hmm. And I was actually able to convince the seller to carry back 20% note. So that was from the seller on that one.
That's pretty cool. You didn't have to raise any capital for that. What about your third? How much capital did you raise for that?
So my third deal was 52 unit deal, and that was raised. It was $2.5 million purchase price. Raised about $700,000 for that one. $750,000.
So what did you do to go from 125 to essentially 750? It's a pretty big jump there.
Yeah. So I mean, as I'm networking, looking for deals, I'm networking with people that are looking to get into real estate. So I actually partnered with a property manager, a commercial broker, and another family member. So these were people still in my inner circle. I hadn't quite started the marketing train that I have now, but it was just starting those conversations with people that I'm talking about real estate with.
And you can raise a considerable amount of money as you have done, with one-on-one conversations like you've done. At what point did you start feeling like you need to do something different in order to scale this business? And when did you first become aware that you actually wanted to scale a business? Like, what did that look like?
I think from the beginning, I knew that I wanted to continue to scale, but that looked a lot different than what it is now. That was piecing together 50 unit deal here, 12 unit there. I think when I had a couple units under my ownership, a couple hundred units, with just me, my father-in-law now, and a couple other the property manager, commercial broker, I knew that one, there was only, so I'm doing this in my backyard. There's only so much inventory in my backyard of Arkansas. I'm here in Northwest Arkansas. There's not a lot of units here. And I knew that I was going to have to scale up outside of my market. And I knew I was eventually going to run out of, friends and family to do that. So, going to these events, seeing these other people with hundreds and hundreds, thousands of units. It's something where it's not just something you're talking about. You can look and see and look at that person. Okay, if that person's doing it, why wouldn't I be able to do it? So I had this track record of doing these deals by myself and putting these deals together. I knew that I had something going. I've seen every part of the deal, and now I can really use that to scale up. I can see all parts of the deal, but I knew that I was going to have to go outside of my market, and two, go outside of my friends and family if I really wanted to build a business.
When I was I was selling knives. This is because you mentioned sales in the beginning.
Yeah.
And, we were selling a product called Cutco, which I now gift to people.
Yeah. Just got a gift from a commercial broker, Cutco knife.
Yeah, it's great. It's a great gift. So people wouldn't go very far in that business if they couldn't get outside of their friends and family. So they had to constantly be asking for references outside of that. And that was, I was able to make that last for like 5 years. And so just asking for future references. But in our business, part of it is it's either getting out there on podcasts, it's getting to events and meeting people. It's whatever form of that. You have to be able to get outside of that friends and family circle, be able to raise money efficiently. And so you started to kind of scale up even like a platform. Talk to us about how you did that.
Yeah. So that it's good experience too. The Cutco, that I'm sure that sales experience has taught you
things right here.
Yeah. It's you use that every day, and some of that stuff, it's part of your foundation. I think each level is part of your foundation to continue to level up. But for me, it was back to what I knew, okay, I know Michael, and not to love on him too much, but I could tell he was authentic, and I could tell he knew what he was doing. He's kind of a nerded out a little bit, and he's also got so I knew that I trusted Michael. So I was familiar with the Platform Builders program. So my wife, she's got a background in marketing. And one of my goals was to retire her from real estate, to let her retire. So, for me, I wasn't like, man, I hate my job and I got to get out of here. Some people, that is a thing. And for me, it was, the generational wealth, and two, for her to have her own business and be able to retire. So that's when we signed up for the Platform Builders program. So I had my wife kind of take the lead on that with her background in marketing, but I joined it with her, the two of us. So that was huge, instrumental for us. Before that, I didn't even have a business card. Before that, I built a portfolio of about a couple hundred units with no business card or no website or anything like that. So, she took the lead on that. We developed the website, the lead magnet, got booked on a bunch of podcasts. So that really started the marketing material, creating business social media pages, which was important. So I wasn't really looking at that aspect of the business. I was focused on getting deals done, so that's something I could have done more simultaneously as I was doing deals from the beginning. But that was in about 2020 when we made the decision to really grow our business to the next level and join the Platform Builders program.
It's so common. Real estate investors think they're in a real estate investing business, and maybe in the beginning you are, but when you get to a certain point, like you with a couple hundred units, you start shifting from a real estate investing business and you're becoming a fund manager, right? And as a fund manager, you get into marketing and sales. You have to invest in your business to generate more leads that leads to investing dollars, right? And so now you're essentially, a marketing business. So you have now this website, you have a lead magnet, which is basically a fancy word for saying it's a free download. And you do that to capture leads. And then people basically book a call with you. You want people to find you through your brand and book a call with you. And so what have you done? So you have this core platform, all these automations that do a bunch of stuff so that leads are downloading your free magnet and you're getting in the scheduled call. And so you've done all that. And then what did you decide to do with regards to content and channels? Did you focus on a particular channel for your content, or what did you do there?
Yeah. So in the beginning, my focus was podcast, just getting out and telling my story. I had an interesting story about, building up this portfolio just by myself and with some friends and family. So that was my main focus. We built out Instagram and Facebook and LinkedIn, and even created a YouTube page. So we hired one of the guys, the YouTube brand content guys that came and spoke at one of the Platform Builders events. And we kind of went off with the YouTube videos, but now the focus has been more Instagram, Facebook, and LinkedIn. But we do have a YouTube page. I think it's important. I think it's important to have, some sort of presence on each of the platforms, but like you mentioned, focus on 2 or 3 that you like doing. So for us, it was, podcast, Facebook, LinkedIn.
And what has all that been doing for your business?
Yeah, it's not keeping me a secret. It's letting people know what I'm doing. I think a lot of people want to get involved in real estate, and and people in your inner circle that you may have not thought, maybe you might have thought you had, like, okay, if I'm going to get into real estate, these people are probably going to invest with me. But once you start putting the word out there's people in your inner circle that you didn't know were in your inner circle that want to get involved in real estate. So I think it starts there too, and then it grows to people that may not be in your inner circle, and it may be people that know someone that knows someone that knows you. So it really just grows that sphere of people that you're involved with.
So I was doing this business for a while, the old school way. Before I had a business about 3,400 units in my last one, and nothing to do with platforms or anything like that. But I'd seen a lot in the business, and then I'd even started working with Michael for a little while, and I started to see how some of these things work. But then I actually took the Platform Builders course, and I was like, man, there's so many things I didn't even know. That like about avatars and this and that, like
avatars.
And it was like, and it's kind of an intensive course, but it was good. I was like, wow, I feel like this whole world has just opened up. And I'm just curious because I took it as well. I was like, how did Michael come up with this? First of all, this is great. Like, I was like, it's pretty nuts. And then
that marketing geek.
What's that?
It's a marketing geek, and
exactly. So it works. So I'm just curious, like, what, if anything, from that you took away that kind of helped you scale out that was just impactful for you? Because I know I had quite a few.
Yeah, I mean, the brand, like you're creating your brand image, I think is important too. Like what's your message? And what's your app? You mentioned it right there. What's your avatar? So who are the people that are going to relate to you, or who are the people, what kind of connection can you have with a certain amount of people? It's not just going to be, I want all high net worth individuals to invest. I mean, we all want, that's great, but you kind of want to hone in on that. So whether, you've got guys down there, like maybe they were a physician, or maybe they have family in the military that they're tracking, or maybe they, there's people that zone in on dentists. For me, it was, busy professionals and business owners was kind of what I nailed down on. Guys that were doing well in their corporate job that may not, their time is better spent, elevating themselves in their company, but they want to get involved in real estate. So that was kind of my avatar, was, some high level executives or your high level sales professionals that were growing with their company that want to diversify outside of that.
Yeah. Sorry, Michael, I have one more follow up on that. So, you get to now, kind of the coolest part about it is you can now look at you have the kind of the newer method of raising capital, but you can still combine it with the interpersonal relationships, and you just have more people to form relationships with. You have a bigger pool as your reach is out there, right? So you start them in, they already know you, so it makes that conversation even easier when you go back versus just going for coffee at the, like we used to do on the other side. You have kind of a range of how you can raise capital and how you can meet people, which I think is really powerful. Sorry, Michael.
Yeah. Do you have an example of someone that you met, you don't have to mention name, but someone you met literally purely just through social media and ended up investing with you? Like, can you describe how that might have happened?
Yeah. So, I mean, I was on a podcast before, and they heard my story, and they had been with their company for about 10 years. And they knew they wanted to invest in real estate for about 5 years. They've been with their company for 10 years, and they just resonated with my story, and they reached out to me. They downloaded my ebook, signed up on it, and they sent me an email like, hey, I've been working with FedEx for 10 years now. I've been trying to get involved in real estate for a long time. I wanted to do it myself, but I've been kicking the idea around forever. So the conversation started there. We had a couple more conversations, and they've invested in three of my deals with me. So it was just solely from listening to me on a podcast.
I just love that. And, it really shows the power of the platform, that you've met someone that you would never have met without having the platform in place, without you getting on a podcast or even YouTube. I love that. I talked about scaling a little earlier on, and you said, man, I wish I would have thought about this earlier. And again, this is very, very common that syndicators don't really think about scale. They kind of approach it more of a hobby or a side gig, probably because they don't really believe that they can do it. And then once they've done their first deal, like, oh my gosh, I can do this. Or maybe I got lucky, right? And they do a second deal. And at one point they start thinking out, oh my gosh, I need to scale this. And the marketing is like the last piece they think about. And so if you were to go back to maybe even before you did your first deal, like if you were to think about your scaling plan, right, at the time, like what would you do different from a scaling perspective?
Yeah, start talking about it more, start marketing more, creating a pay. Like I would have joined the platform builders program in the beginning, created a base. I think it's good to have a marketing foundation, just as it is the real estate foundation, so I think if you're going after deals, you can do the marketing at the same time. So like I mentioned before, it wasn't until 2020 that we joined the platform builders program and really started like pushing the marketing piece. And I've been doing real estate since about 4 years before that. So getting the marketing out there is really important. There's two forms of the multifamily business, or any bit, it's deal flow and capital flow. So I was really focused on the deal flow. I knew that the capital flow was a thing, and I thought, just the friends and family could keep me busy for a while, but I think you can really scale even faster if you can do both at the same time.
Yeah, Brian, that's a great point. Brian, how can people reach you if they want to get in touch with you?
Yeah, so you can look me. I'm on Instagram, Brian Wagers, or Facebook, Brian Wagers, wagerscapital.com/wealth plan. I've got a book on that for you guys as well.
Awesome. Thank you so much, Brian. We really appreciate your time on this show.
Thanks, Garrett. Thanks, Michael.
All right. To me, the great takeaway is that we got to start thinking about scale a little earlier on. I mean, we don't want to confuse people with, oh my gosh, let's talk about how to get to 1,000 units. Okay. It's not helpful when you haven't done a first deal yet. And you're maybe not even sure you can do it. Okay. It's not helpful to say, hey, let's sit you down and talk about your scaling plan to 1,000 units. You're going to be so overwhelmed that you're not even going to start. So therefore, we don't even do that with people who haven't done a first deal yet. However, when someone has done a first deal, okay, we call that person a deal maker professional, because you've crossed the line from a hobbyist, side gigger, to, I don't know if I can do this. Like, oh my gosh, I just did this. And now you need to approach the business more as a professional, as a business person. You are now building a business. You've proven it once. And my gosh, there's about 100% chance you can do it again and again and again. Therefore, let's take some time right now and really talk about a scaling plan. Like, let's talk about revenue coming in. What deals are you projecting? What are the acquisition fees, asset management fees? How much capital do you raise? What kind of marketing do I need to do? What kind of people might I have to hire, right? And really think about that. I think that's the lesson to me. And that's what Brian was saying. And I agree with him. We should all have this conversation earlier in our careers.
Yeah, I think that anyone can make this a hobby, and with the value that this business brings you owe it to yourself to kind of treat it like that professional, scalable thing that it really is, because it can change your life. And one thing I really liked that Brian mentioned was that the math just didn't work out on the single family scaling right away. He's like, did the math. He's like, wait, something isn't adding up here. If I try to scale this business, it's going to be a lot more headache than a multifamily business. And so there's so many different versions of how you can turn this into a scalable entity, but you're in the best part is you're in the vehicle. You just have to figure out how to operate it. You found the right vehicle. So turn it into whatever you can make it from there. And you're going to have a much easier time than a single family game.
I just love the art of the deal. I love syndications. It's a little true definition of entrepreneur, making something happen out of thin air, right? You don't have a deal, you have nothing, you don't have capital, you put it all together, and all of a sudden you have this multi-million-dollar vehicle we just talked about. That's what I love about it. And that's what's so rewarding about this. Now, you might be listening to this right now and going, you know what? It's just way too complex. I just want to invest. And there's nothing wrong with cashing, checks or 15 to 20% average annual return on your money that essentially is tax-free and is just fantastic in this inflation environment. So if you're more of a passive investor kind, or maybe you want to do a little of both, we'd love to have a conversation with you at Nighthawk Equity, which is our investment company, right? We teach you guys how to buy apartment buildings, but we also buy apartment buildings. We actually do what we say we do. And if you're more of a passive investor type, we'd love to have a conversation with you at nighthawkequity.com. Click the join button, fill out a short form, and schedule a call with us. And we'd love to brief you on some of our upcoming opportunities that we might have for you to partner with us in. So anyway, guys, this is a real business. And if you haven't done your first deal yet, think of it like this way. Think of it more like a foregone conclusion that you're going to do your first deal. That's the way I think about it. You just got to keep moving forward, educate yourself, and keep taking action. And when you do that, you will do your first deal. You will quit your job. And all of a sudden, you are building a company that will leave generational wealth for you and your family. So hopefully you found that inspiring. Catch you guys next time.